Hello everyone and welcome to the Cyclical Investors Club YouTube channel. So this week for my topical video, my plan was to talk about brands of stocks that people just don't pay attention to, rather than the ones that have the big names, the FANG stocks and everything, about how it doesn't really matter how many people know about a stock. You can make money off stocks that nobody pays any attention to, and usually you can make more money easier, more safely, by finding the stocks that aren't being talked about in the news all the time. I first started investing in about 1999. I didn't know anything that I was doing. My first investment went to zero. I mean, all the way to zero. I didn't even try to sell it during the dot-com bust. So I've been in the same situation that a lot of the people that are investing for the first time on Robinhood are in. Now, there are some sophisticated investors on Robinhood, but a lot of people are just newer investors who are getting in for the first time, and a lot of them are going to lose a lot of money. So I really try not to be preachy about anything that I do, because there's lots of different strategies that can work when you're investing, and depending on a person's individual talent, you can make money in different ways, okay? So I never try to say this is the wrong way or this is the right way, or, blah, 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 blah. If it's working and you have the right kind of talent and resources, you can make money lots of different ways investing in stocks. But there's a reason why I don't pay any attention to stocks like the ones that we're seeing now, like Gamestop, AMC, and so forth. And it's because of the time frame that I take. The time frame is what's important. I don't short stocks and I don't use options. There's nothing inherently wrong with shorting stocks. There are times where, depending on a person's individual situation, options can make sense. But what it comes down to me is time frame, okay? I focus on medium and long-term time frames. Really, I focus on medium term and then kind of just let the long term take care of itself. Now, what I mean by medium term is about beyond 2 years up to like 5 years. Like that. That's what I'm looking for in most of the investments that I make. So when I buy a stock, I assume I'm prepared to always hold it for 5 years, no matter what the price does. And on average, even the ones that, go up a lot and make a lot of money, usually on average, it takes a couple years for that to happen. Okay. So a lot of times I'm aiming for 5 years. I'm prepared. Who knows what happens? You have a recession. It can take longer for your thesis to play out on a stock. And I'm prepared. If the business is still growing and everything is looking good, it doesn't get overvalued, it doesn't get overdone, I just keep holding it. I don't care how long I hold it. I hold it forever. If it doesn't get too expensive. But when I'm analyzing the stocks, you'll notice that I'm usually, for just normal kind of less cyclical type stocks, I usually am using a 10-year time frame for my estimates. And then for more cyclical ones, typically I look at more of like a 5-year time frame, because they tend to move quicker. There's a few exceptions to that, but that's usually the case. So when I was talking about refiners last week, those are like 5-year time frame things. Now, I expect those moves to happen probably sooner. I mean, they're probably going to happen in 2 years. But as I said, maybe the vaccines don't work. Maybe people don't take them. Maybe the variants change and it just takes us longer to churn through this. So I'm willing to wait for that. My returns won't be quite as great if I have to wait 5 years for a 100% return. Okay, but they're still good returns. They're still better than the market average long term. And I can't always predict, the vicissitudes of things that will happen after you buy a stock. But basically, I just sit around and wait. I mean, if people want to send the stock down after I buy it, hey, it's no big deal. I just wait for what I want to happen. Now, sometimes something will come along and it will change the actual thesis that I had, like something with the company specifically. Management will commit fraud or something. I mean, there's weird things that come up, or an estimate that I thought was going to happen regarding the business just doesn't happen, or competition is worse than I thought, you know. And those are reasons to sell, but just because the stock price goes down after you buy it doesn't mean to sell. I mean, I've had stocks that I bought this year and last year that have fallen 40% and now they're up 100%. Okay, I didn't sell them, I just hung on to them. All right, and the reason I was able to do that is because my time frame was looking forward out 2 or 3 years, or even longer. So I didn't know when things were going to turn around. But if you understand cycles and you pick good companies, they usually turn around. I mean, about 80% of the time, you're going to be right eventually, and you just have to basically wait around for it. So when it comes to something like GameStop, so when I would look at it, I think AMC is almost better, okay? Because I actually have a couple investments in stocks like that were hurt by COVID, okay? That I think are going to legitimately come back. But they weren't hurt as bad as like an AMC was. So they didn't have to take on a lot of debt. I talked about this a lot in my videos about the refiners and with Carnival Cruise Line. So if you take Carnival, its business was damaged so bad, it's going to take a long time for them to come back from it. And that's how I viewed AMC. But I found a couple other small cap businesses, interestingly. I'm not going to mention their names here. But I thought, oh, well, their businesses weren't really hurt that bad. Their stock price is way down, though, because of COVID. But we know COVID's eventually going to go away, or that's my thesis. And there's a lot of upside left in these stocks. So I bought a couple of them on that premise. And I'm talking about pretty small caps, which is what we're dealing with this whole short selling thing. So interestingly, this week they were up like 30% or 40%. I think at one point one of them was up like 50%. These aren't any of the ones people are talking about on television, okay? And the only reason they were is because there were people short those stocks that were probably covering them because they were panicking a little bit because they didn't know what the next target stock was going to be. Okay, but the difference between what I'm doing and what the people buying GameStop right now are, or AMC or some of these other stocks, is these businesses are in trouble. Okay, the businesses I bought are not in trouble. If COVID goes away, they haven't taken on a lot of debt. They haven't issued a bunch of new shares. They haven't done any of the things that these really damaged companies are doing, right? So they would be fine anyway. It might take 2 or 3 years. It might take 4 or 5 years to get these 100% gains or 200% gains. But the businesses are fine. If you just went to buy the business, you would not have to worry that they were ever going to go bankrupt anytime soon. That's not the case with GameStop and AMC, some of these other stocks that are skyrocketing right now. So the question I would ask people to ask themselves is, look, what if you just went out and bought GameStop's business? Is it a viable business? Medium and long term, you know, is it going to be around and making you money and growing and worth the price you paid for it 5 years from now? And the rational answer to that is probably not in most of these cases. Now, what I find interesting about all this is there is a self-fulfilling prophecy that can happen here, okay? And Tesla's a good example. I'm going to put a video out about Tesla. I've never written about it. I don't usually talk about it, but it's in the S&P 500 now, so I feel like I should share my thoughts on it. But what I find interesting is that with Tesla, you know, Elon Musk said, oh, we don't need to raise any more capital anymore. But he was berating the short sellers. And I was like, look, if you own a stock, if you own a company, and people are driving the stock price down, it doesn't matter to most companies. They already issued the shares to the public, okay? It doesn't mean anything to most businesses unless they need to raise more capital and issue more shares. Because if the price is higher and then they sell a bunch more shares into the market, then they get to keep that money. But the fluctuation of Tesla's price doesn't do anything to the business unless they need to raise capital. So when Musk was out there saying, we don't need to raise any more capital, and then he was also saying, damn you short sellers, blah, blah, blah. Well, that should have raised suspicion. And of course they did raise capital. They got the price of the stock up, and then they went out and they sold more shares at the higher price so that they could get money to run their business. Okay? So it worked for Tesla. All right? Those are just like facts, all right? That's not even like controversial. That's just exactly what happened. So the interesting thing about GameStop and the rest of these stocks is if the price stays high long enough, they can go to the market and sell more shares, okay, at these higher prices. And then they get to keep the money from that to help run their business. So they can use that money to expand into other areas, maybe to buy some other company that can help them be better at what they do, to kind of buy time so they don't go bankrupt till COVID goes away or whatever, if it's AMC. So in theory, look at the basic level, the fact that the stock's price is higher doesn't mean anything to these companies in terms of their business, unless they can go out and raise more capital. I know AMC was able to borrow a bunch of money, but again, that doesn't really have anything to do with the stock price. All right, so I wouldn't say it's totally disconnected, but it doesn't. But if people are really willing to go put their money in to buy more of these stocks, these companies might be able to actually survive. So that's why it's, in reality, I mean, I know it's just people trying to get rich quick, and it doesn't have anything to do with these businesses for the most part. Like 90% of it does. But you have to be a little bit careful because it could save these businesses. I mean, or at least make them last longer, give them a chance to restructure, and a lot of other things. So it's now the problem is, even if they survived and everything, the investors that are buying now are they probably don't know any of this stuff, right? They probably don't really understand it. They just see the stock price going up and they're buying it, and that's not a good reason to be buying it. And also, just because these companies survive, and this is exactly what I talked about in my Carnival video last week, just because they survive doesn't mean they're going to be good investments. You know, they call them, zombie companies for a reason, because they just keep on moving around and surviving, but they aren't providing investors good returns. So it's not enough just to buy a company that's not going to go bankrupt. You need to buy a company that's going to grow earnings and return those at some point to shareholders. So that's about all I have to say. I mean, about GameStop and the short selling. You absolutely don't need to. I mean, I just ignore all the political things to begin with. But if you take a medium-term time frame and ask yourself, I mean, almost none of this is relevant. If it was up to me, I wouldn't talk about any of it. But so many people have asked me about it. I mean, people who aren't really investors, or maybe they just have a 401k or something. They're like, Corey, what's going on? I'm like, well, I don't know. I try to ignore it, but I mean, when it's on every media channel and going on and on and on. So, and there's the debate over Robinhood and their practices and so forth, in terms of selling their order flow and everything. I mean, if you use limit orders and you specify and you know what price you're willing to pay for a stock, unless you're talking about really weird kind of low volume situations and you're spending you're putting in tons of money into a very illiquid stock or whatever, my view is, who cares? I know what price I'm willing to pay for something, and if I put it out there and buy it at my price, if I cannot get charged a fee because they want to try to front run me, well, they can't really front run me if I tell them what price I want to pay. The only thing that can happen is somebody could buy it before me and the price never falls quite to the level that I want it. With large cap stocks, that isn't really a problem. And with Robinhood investors, I mean, the average amount of shares that they're buying is not big enough for them to even worry about that. So it's when you get into the options. So here's the other problem with time frame. I'll just keep going and blabbing on and on. Okay, so the issue I have with options for my strategy is that usually, you don't get beyond 2 years. There's time limits for your options, okay, and they run out, they expire. And nowadays, I mean, the people are using, I don't follow this super closely, but it looks like very short-term, option strategies and so forth. It's really just gambling. I mean, if you take let's put it this way. I can outwait anybody. I can hold a stock and just wait. And eventually, people will get bored, or they'll change their mind, or some catalyst will come along. But I don't get hurt. I can't get hurt that bad. I just have to wait. And that's the worst thing that can happen to me, basically. Or a stock price doesn't fall quite to the price I'm willing to buy it. But I mean, I write public articles on large caps where I tell people the price that I'm willing to buy. I mean, if somebody really wanted to come in and they had a ton of money, maybe they could stop a stock at a certain level right before my buy price or whatever. But it's just not something I worry about, especially with large caps. If you're talking about a tiny little microcap company, I mean, there's a reason I don't talk about them publicly. They're in my private service. And it's kind of because of that, because I let people know the prices I'm going to buy ahead of time. So if somebody really wants to come in and stop it from getting to that price, I mean, if they're that motivated, you know, that's fine with me. I can find other stocks to invest in. So, and it would only happen very rarely, I think. So I don't like the time constraints. It's all about time frame. Short selling is the same way. It's very difficult to short a stock for years and years and years, okay? And there's expenses to options, and there's expenses to shorting. So you're getting a drag on all that. I mean, that's how Robinhood's making a lot of their money. So if you just don't do it and just don't, then you don't have to worry about it, right? And the worst thing that can happen is I have to wait a little bit while for the short-term people that are trying to manipulate things to get bored or give up or go away, and then I make my money. So, I mean, that's the simple solution. It's hard to ignore all the media hype and everything, and it's hard to not jump on a train that looks like it's going to the ceiling. And it's hard when, I mean, Buffett and Munger have talked, you know, it's, you look at your neighbor who is dumber than you and they're getting rich, right? And that's how these bubbles get going. I mean, that's how these, because people just assume that's not fair. And I've just developed an ability to just ignore it. You know, some of them might get rich and stay that way. But I mean, Munger was talking about Bitcoin, and, you know, he said, you know, the worst thing that could happen is somebody go out and get rich trading Bitcoin, because they'll think they can do it again, you know. So basically, they'll get lucky. They got in on the train a little early, and they'll think they can repeat it. Now, these really smart guys on Reddit or whatever, whoever came up with this, well, I won't label it, whoever came up with this kind of pattern of stock strategy, maybe they did find a way to repeat it, you know. It's like, oh, look what happened with Bitcoin. We find something super duper cheap that people think they can just put a couple bucks into, and then boom, you know. So they had this thing going on. I don't know how ethical it is. It kind of depends on what their intentions are, and it's hard to determine people's intentions, you know, until you get a lot of evidence. But you can avoid all of it. Focus on the business, focus on your time frame, and make that time frame, I would say, greater than 2 years. All right. So thanks for watching the topical video this week. I promise to get back to my boring videos, you know, where I drone on and on about stuff, but I figured I would just go ahead and chime in with my 2 cents about the GameStop phenomenon. If you like the video, subscribe. Don't usually touch on such hot topics. I like more boring, substantive topics. I mean, basically I came out and told you to ignore it all. But hit the subscribe button, hit the like button if you like the video. And I'll have I'm covering big tech this week. So I have Facebook, Tesla, and Apple coming. I usually cover more obscure stuff, but I thought I had reason to talk about all of them this week. So thanks for watching, and I'll see you later.